Hi, and welcome back to BullionIQ, your place for clear, simple, and expert analysis on finance and cryptocurrency. I hope you are having an amazing day and ready to dive into something very important happening in the XRP market. Today we are talking about a theory that has been getting a lot of attention lately. People are starting to ask, will I even be able to buy XRP on public exchanges one day? It's a question every XRP holder should consider, and I want to break it down for you in a way that makes sense. Before we get started, I want to take a moment to thank everyone who supports this channel. Your likes, comments, and subscriptions mean a lot, and they allow me to bring more detailed and accurate crypto insights to you. If you like the content, hit the like button, subscribe, and type an X in the comments if you are holding XRP. This small support really helps the channel grow and helps us continue covering big topics like this one. Recently, there has been chatter about the availability of XRP. Some people believe that one day only major custodians, banks, or fund managers will hold XRP, and that retail investors will only be able to access it through ETFs. While this theory has been floating around online, it's important to analyze it carefully. In today's video, we will explore how realistic this possibility is and what it could mean for both new and existing investors. We will also talk about some recent news regarding ETFs and the current price action of XRP. These are all important factors to understand before making any investment decisions. I want to start by sharing something I found very interesting from a recent Twitter space. This session celebrated the launch of the Bitwise XRP ETF, and it included David Schwartz, one of the co-founders of Ripple. He said something that I think every XRP holder should know. He explained that blockchain adoption will likely happen much like the early internet. What he meant by this is that adoption will start with institutions first. Financial institutions will integrate blockchain technology into their existing systems, and then the benefits will trickle down to everyday users. Think about the internet when it started. You didn't need to know how to code websites or understand the protocols to use it. You just signed up with Google or another service and immediately became part of the internet. XRP is being implemented in a similar way, where institutions will bring the technology to the end users, simplifying access and making adoption smoother and more reliable. This approach makes XRP very different from most other cryptocurrencies. Many projects in the crypto space rely heavily on retail hype or meme culture. Some try to position themselves as competitors or XRP killers, claiming to have better retail adoption. However, XRP's focus has always been on integrating into real-world financial systems rather than chasing short-term retail excitement. By the time mass adoption happens, banks and institutions will already be using XRP-based solutions, which will naturally bring more people into the ecosystem. This is the strategic advantage that XRP has over other coins that rely primarily on retail adoption and speculation. Now, about the theory that XRP may not be available on public exchanges. Some posts online suggest that only ETFs or major custodians will be able to sell XRP in the future. I do not agree with this. The XRP ledger has a decentralized exchange, which means anyone can buy or sell XRP at any time. While large transactions may require certain compliance checks like KYC or AML, the ability to trade XRP publicly is not going away. Blockchain technology is inherently decentralized, and no single authority can stop people from trading it. Even if certain exchanges try to limit access, someone somewhere will always be able to buy or sell XRP. In conclusion, XRP is fundamentally different from most other crypto projects. It focuses on financial institutions first and retail adoption second, much like how the internet spread. The decentralized nature of the XRP ledger ensures that the coin will remain accessible to the public, despite any theories about limited availability. For holders today, this is a major confidence booster because early accumulation could give you a strategic edge as adoption accelerates. This is the right time to understand these developments and position yourself wisely. In the next part, we will dive into the recent ETF news, trading volumes, and what it means for both short-term and long-term XRP investors, so stay tuned. Now let's dive deeper into some of the recent ETF news and trading activity that has been driving attention toward XRP. As many of you know, the Bitwise XRP ETF just went live, and it had a strong volume, signaling growing institutional interest. While it wasn't record-breaking compared to some previous launches, the fact that major institutions are putting money into XRP ETFs is important. This isn't just hype. It shows that financial professionals are starting to take XRP seriously as a digital asset with real utility. The launch of the ETF provides a bridge between traditional finance and crypto, making it easier for banks, fund managers, and institutional investors to hold XRP without dealing directly with the challenges of buying and storing the coin themselves. This development alone could help accelerate adoption and drive the price higher over time. During the Twitter space that celebrated the Bitwise ETF launch, David Schwartz emphasized how XRP adoption will likely follow the same path as the early internet, with institutional adoption first and retail adoption following. This is a critical point because it explains why ETFs matter. When institutions start buying XRP in large quantities, they create demand that will naturally increase the coin's value. Retail investors often follow the trends set by institutions. And once these large players are actively participating, it signals to the market that XRP is a serious and viable asset. This is very different from coins that rely on social media hype or meme culture to gain traction. XRP's path to adoption is strategic, structured, and focused on the long term. Now, looking at the trading numbers from these ETFs, we see some interesting trends. Bitwise showed strong participation from institutional investors, and this is just the beginning. Other ETFs, like the ones launched by Franklin Templeton and Grayscale, are also beginning to see volume, and collectively, this represents hundreds of millions in capital flowing into XRP. It is a significant development because it means that XRP is attracting real smart money. These are investors who analyze fundamentals and adoption potential rather than chasing short-term gains. The influx of institutional money can create a supply shock, meaning the available XRP in the market could become more limited, which tends to push the price higher over time. Even with all this, the price of XRP has been stabilizing around key support levels. Right now, XRP is showing some resilience, attempting to find a bottom and bounce. This is encouraging because it means that despite short-term volatility, the coin is holding strong. Many retail investors panic during dips, but as someone who focuses on long-term trends, these dips are often the best buying opportunities. The market is cyclical, and history shows that XRP has always recovered after corrections, especially when there are strong fundamental reasons like institutional adoption and ETF launches. Another point to consider is that these ETFs are also helping to educate the broader market. Traditional investors who might not have understood XRP before now have a regulated, accessible way to invest in it. This increases overall market confidence and adds legitimacy to XRP as a digital asset. With more regulated channels available, more capital can flow into XRP safely, which is good for everyone in the ecosystem. This is one reason why some people are concerned about running out of XRP. As adoption grows, demand from institutions and ETFs will increase, making it harder for new buyers to accumulate large amounts at early-stage prices. However, the market will still remain accessible through exchanges and the XRP ledger, so the public can always participate, even if prices rise. In summary, the recent ETF launches are a major positive signal for XRP. They show growing institutional confidence, potential for higher adoption, and more legitimacy in the financial world. Prices may fluctuate, but the fundamentals are becoming stronger every day. For anyone holding XRP or considering entering the market, this is a time to pay attention, understand the numbers, and recognize the long-term trends rather than getting caught up in short-term fear. The combination of ETF activity, institutional involvement, and the strategic approach of Ripple makes XRP unique among cryptocurrencies and positions it well for future growth. Now that we've looked at ETFs and institutional interest, let's talk about adoption and what it really means for XRP holders. One of the most important things to understand is the difference between retail adoption and institutional adoption. Most people focus on retail adoption, thinking that mass usage by everyday people is what drives a coin's value. That's not entirely wrong, but XRP is taking a different approach. Ripple has always focused on working with banks, payment providers, and financial institutions first. The idea is simple. Institutions can process huge volumes of transactions efficiently and safely, and once they implement XRP into their systems, the benefits naturally flow down to retail users. This approach mirrors how the internet was adopted. In the early days, most people didn't know how the internet worked or create their own websites. They just used Google, Amazon, or other services. Ripple is doing the same with XRP by providing the infrastructure, letting financial institutions handle the complexity, and then passing down the benefits to the end users. This is a huge differentiator for XRP. While other cryptocurrencies focus on flashy retail hype, meme coins, or smart contract platforms, XRP focuses on real-world use cases. Its goal is not to be the fastest or trendiest crypto. Its goal is to become the backbone of financial transactions, liquidity solutions, and cross-border payments. Once institutions start using XRP at scale, retail users automatically benefit because they will interact with it through banks, apps, and platforms they already use. This is why David Schwartz's comment during the Bitwise Twitter space was so important. He confirmed that institutional adoption is the key driver, and retail adoption will follow naturally. In other words, the hype you see on social media doesn't compare to the real structural adoption that is happening quietly in the background. Now, regarding the idea that XRP might one day not be available on public exchanges, this is something that gets discussed a lot. Some people fear that only ETFs or custodians will hold XRP and that ordinary investors won't be able to buy it. I want to be very clear. I don't believe that will happen. The XRP ledger has a decentralized exchange built in, which allows anyone to buy or sell XRP at any time. Even if ETFs gain popularity and more institutional money flows in, the public will always have access. Large transactions might require compliance measures like KYC, but that does not stop the average investor from participating. Blockchain technology is inherently decentralized, and XRP's ledger is designed to connect buyers and sellers directly. This core function ensures the public market remains open, even as adoption scales. It's also important to understand that institutional adoption actually benefits the public market. As banks and large investors buy and hold XRP, scarcity increases, which can push the price higher. This creates a win-win scenario. Institutions achieve their liquidity goals, and early retail investors benefit from price appreciation. So while there might be a perception that it will be hard to buy XRP later, this is more about potential price increases than actual access restrictions. Everyone will still be able to trade XRP, but prices may reflect the growing demand and limited supply in the market. Finally, looking at XRP's price action, we can see it trying to find support after recent fluctuations. This is natural in any growing market, especially when institutional adoption and ETF activity are influencing buying patterns. Short-term dips often create buying opportunities for those who understand the long-term fundamentals. If you hold XRP, patience is key. The fundamentals haven't changed, adoption is still growing, and the infrastructure is improving. This isn't a moment to panic. It's a moment to understand the bigger picture and recognize that early accumulation could lead to substantial gains as adoption increases. In conclusion, XRP's strategy of institutional first adoption combined with ETF accessibility and the decentralized ledger makes it unique in the crypto space. Retail adoption will naturally follow, and the public will always have access to buy and sell XRP. This combination of factors creates both a secure long-term investment and a growing ecosystem for future users. For XRP holders today, understanding these dynamics is critical for making informed decisions and staying confident in the face of market noise. Technical analysis and how XRP is moving in correlation with Bitcoin and the broader crypto market. Understanding these cycles is essential because it helps you see beyond short-term noise and recognize opportunities. Historically, Bitcoin has set the pace for almost all other cryptocurrencies, and XRP is no exception. When Bitcoin experiences strong rallies, XRP usually follows, often with amplified gains. The same happens in corrections. Dips in Bitcoin can influence XRP, but XRP also has its own dynamics due to institutional adoption and ETFs. Right now, looking at the charts, Bitcoin has recovered from recent declines and is holding strong above key support levels. This recovery suggests that the broader crypto market, including XRP, is still in a bullish structure despite short-term volatility. When we analyze market cycles, one thing becomes clear. Dips are normal. Bitcoin averages 2 declines of 20% or more each year, and Ether averages about 3. Even traditional stock indices like the S&P 500 and NASDAQ experience multiple corrections every year. The key for investors is not to panic during these dips, but to use them as buying opportunities. XRP has shown resilience in past cycles, and the combination of institutional support, ETF activity, and the growing XRP ledger ecosystem makes it likely that future dips will be temporary. Technical analysis also supports this view. The death cross, which is when the 50-week moving average crosses below the 200-week moving average, is often seen as a bearish signal. However, neither Bitcoin nor XRP is currently in a death cross on the weekly chart, indicating that the long-term bullish trend remains intact. Another factor to consider is the U.S. regulatory environment and geopolitical developments. For instance, the Trump administration's pro-crypto stance, including the creation of a U.S. crypto reserve, could bring direct government participation in Bitcoin and XRP. This type of support is extremely bullish because it introduces liquidity and confidence into the market. Additionally, potential stimulus events like the proposed tariff dividends in mid-2026 could create significant buying power for digital assets. These macroeconomic factors mean that even if we see a short-term dip in prices, long-term trends are still favorable. XRP is uniquely positioned because it combines strong fundamentals with real-world adoption, which reduces the likelihood of prolonged bear markets. Looking at XRP's price chart, we can see that it is attempting to hold at support levels around $0.30. The Fear and Greed Index currently shows extreme fear in the market, which historically signals that the market is near a bottom rather than the start of a long-term decline. People panic when prices dip, but this is often the best time to accumulate, especially in assets with strong fundamentals like XRP. Remember, the market rarely ends in fear. It usually ends when everyone is euphoric and bullish. Right now, sentiment is overwhelmingly bearish, which is a positive signal for long-term investors. It's also worth noting that the market is evolving structurally. XRP and other cryptocurrencies are increasingly being recognized as legitimate assets by both retail and institutional investors. The recent ETF launches, regulatory clarity, and continued infrastructure development all point toward a more mature market. This means that the cycles may not follow historical patterns exactly. While some fear a 4-year bear market, current indicators suggest that any downturn is more likely to be limited to 50–60% rather than the 80–85% crashes seen in previous cycles. This gives investors confidence that now is a good time to hold or even accumulate XRP for the next leg up in the market. In conclusion, understanding market cycles, technical analysis, and Bitcoin correlation is essential for any XRP investor. Despite short-term volatility, XRP remains well-positioned for growth due to institutional adoption, ETF inflows, and supportive macroeconomic factors. The current fear in the market presents an opportunity rather than a threat. By analyzing these trends carefully and focusing on fundamentals, XRP holders can make informed decisions and stay confident, knowing that long-term growth is likely even if the market experiences short-term fluctuations. Let's dive into one of the most talked about topics in the XRP community: the idea of scarcity and what it could mean for future price potential. Some people are worried that one day XRP might not be as freely available on public exchanges as it is today. They imagine a scenario where most XRP is held by institutions or ETFs, leaving only a limited supply for retail investors. While this sounds dramatic, the reality is more nuanced. The XRP ledger has a built-in decentralized exchange, DEX, which allows anyone to buy and sell XRP at any time. This ensures that public access remains intact. Even if institutional adoption grows and more capital flows into ETFs, XRP will still be available to individual investors. What may change is the price. As demand rises and supply becomes tighter due to long-term holders, the cost of acquiring XRP could increase significantly. In other words, scarcity in the market doesn't mean you can't buy XRP. It means that the price will reflect growing demand. Scarcity has been a key factor in XRP's design. Unlike some other cryptocurrencies, XRP isn't mined. The total supply is capped at 100 billion tokens, with a large portion already in circulation and a significant amount held in escrow. This controlled supply mechanism allows Ripple to manage token distribution responsibly while creating the potential for supply shocks if demand surges. For example, as banks and financial institutions adopt XRP to streamline cross-border payments, the liquidity they hold will reduce the amount available for trading. This scarcity can create a price appreciation effect over time, benefiting those who hold long-term positions. The more XRP is locked up for real-world use, the less is available for active trading, which can naturally drive prices higher. Another factor contributing to XRP's long-term growth potential is institutional adoption. As more banks, payment providers, and ETFs buy and hold XRP, the supply in the public market will effectively shrink, creating a scenario where demand could outpace availability. This doesn't mean retail investors are locked out. Rather, it creates a premium environment where early holders could see substantial gains. Think of it like a high-demand, limited edition product. The product is still available, but scarcity makes it more valuable. XRP's scarcity, combined with growing institutional adoption positions, it is one of the most promising digital assets for long-term growth. It's also important to consider regulatory clarity. As XRP continues to gain recognition and integration into financial systems, governments and regulators are providing more transparent guidelines. This reduces uncertainty and makes XRP a safer bet for long-term investors. With ETFs and official adoption increasing, XRP is no longer just a speculative asset. It's becoming part of the financial infrastructure. This fundamental shift can have a dramatic effect on its valuation over the next 5 to 10 years. Early holders who understand this dynamic are positioned to benefit the most. Finally, let's talk about long-term investment strategy. The key for XRP holders is patience. Short-term fluctuations, market dips, and fear-driven sell-offs are normal in any market, especially in crypto. Those who panic during these moments often miss out on the larger trend. By focusing on the fundamentals, scarcity, institutional adoption, regulatory clarity, and real-world utility, investors can maintain confidence in their holdings. The idea isn't to chase short-term gains, but to hold through cycles and capitalize on the long-term growth of XRP as adoption spreads globally. Remember, scarcity and real-world use cases are a combination that historically leads to sustainable value creation. In conclusion, the theory of XRP scarcity isn't about being locked out of the market. It's about recognizing the limited supply and growing demand that will likely drive price appreciation in the long term. Public access will remain through the DEX and exchanges, institutional adoption will continue to grow, and XRP's unique position in the financial system ensures that long-term holders have a significant advantage. For investors focused on the future, understanding scarcity, demand, and adoption is critical for making informed decisions and staying ahead in the crypto space. It's important to take a step back and look at the bigger picture, the overall market outlook, risk management, and how investors should approach this unique opportunity. One of the key lessons from crypto markets is that volatility is normal. Prices can swing dramatically within hours or days, and fear and greed often drive these moves more than fundamentals. For XRP holders, the challenge is to remain focused on the long-term vision rather than short-term fluctuations. The fundamentals for XRP are stronger than ever. Institutional adoption is increasing, ETFs are gaining traction, and the XRP ledger continues to provide scalable solutions for cross-border payments. These factors set XRP apart from many other cryptocurrencies that rely purely on speculation or hype. When looking at the broader market, Bitcoin remains the benchmark. It often sets the tone for altcoins, including XRP. Technical indicators, such as weekly moving averages, show that Bitcoin and XRP are maintaining bullish structures despite occasional pullbacks. Historical patterns suggest that dips should be expected and used as opportunities to accumulate rather than triggers for panic selling. Market sentiment indicators, like the Fear and Greed Index, currently show extreme fear, which is historically one of the most bullish signs. When everyone is panicking, it often marks the best entry points. This aligns perfectly with a strategy of patience and conviction, which is critical for long-term crypto investors. Another important aspect is risk management. While XRP has strong fundamentals, it is still a volatile asset. Investors should consider diversifying their portfolios and not overexpose themselves to a single asset. Dollar cost averaging can help mitigate the risk of entering the market at the wrong time. Keeping a clear exit plan, knowing your risk tolerance, and understanding market cycles are essential practices. Remember, cryptocurrency investing is not about predicting short-term highs or lows. It's about recognizing trends and positioning yourself for long-term growth. In the case of XRP, the combination of scarcity, institutional demand, and financial utility makes it one of the most compelling assets to hold over multiple years. The market's future also looks promising due to regulatory clarity and macroeconomic developments. Government policies, pro-crypto stances, and potential stimulus initiatives all contribute to a supportive environment for digital assets. ETFs and institutional inflows act as a stabilizing force, creating liquidity and long-term confidence in XRP. Even if there are short-term fluctuations, these macro factors make prolonged bear markets less likely than in previous cycles. Investors who understand this dynamic can take advantage of dips to strengthen their positions rather than fear them. It's also critical to understand the role of XRP in the evolving financial system. Unlike many other cryptocurrencies, XRP has been designed for real-world use by banks and financial institutions. This creates a unique adoption pathway, different from speculative retail-driven hype. Over time, as financial institutions integrate XRP into payment systems, demand will rise, and supply in public markets may tighten, driving price growth. Early investors who hold through cycles are positioned to benefit the most from this fundamental adoption trend. In conclusion, the outlook for XRP is highly positive, but success depends on patience, informed decision-making, and understanding the long-term fundamentals. Price dips should be viewed as opportunities, not threats. Institutional adoption, ETF inflows, and scarcity create a unique combination for growth. By focusing on the big picture, managing risk, and holding true to a conviction based on fundamentals rather than hype, investors can position themselves for substantial long-term gains. The market may be volatile, but for disciplined XRP holders, the future is bright. Stick to the thesis, ignore short-term noise, and remember that the best gains often come to those who remain calm, patient, and informed throughout the journey.